Welcome to our CFP Exam Prep podcast. Today we're diving deep into a fundamental concept that frequently appears on the exam, the basic tax formula. Understanding this formula is crucial as it forms the foundation for tax planning strategies. Let's break down the basic tax formula step by step. We start with total income, subtract exclusions, then deductions for AGI, followed by either standard or itemized deductions to arrive at taxable income. This might sound straightforward, but many candidates miss important details in exam questions. Starting with total income, this includes all sources of income like wages, interest, dividends, business income, and capital gains. A common mistake on the exam is forgetting to include certain types of income, especially municipal bond interest when calculating alternative minimum tax. Next are exclusions, which are often confused with deductions. Exclusions completely remove income from taxation. The most tested exclusions include life insurance, death benefits, municipal bond interest, and certain portions of Social Security benefits. Remember that employer-provided health insurance premiums are excluded from income, but self-employed health insurance is a deduction for AGI. Speaking of deductions for AGI, also known as above-the-line deductions, these are particularly important because they reduce income regardless of whether you itemize. Key examples include student loan interest, alimony paid for divorces before 2019, and traditional IRA contributions. The exam often tests the limits on these deductions. For instance, student loan interest is capped at $2,500 and phases out at certain income levels. Now let's address a major decision point in the formula: choosing between standard and itemized deductions. The exam frequently tests scenarios where taxpayers are right on the edge between these options. For example, a question might give you mortgage interest, property taxes, and charitable contributions that total just slightly more or less than the standard deduction amount. Here's a practical application. Consider a client with $100,000 in total income, $5,000 in municipal bond interest exclusion, $4,000 in student loan interest deduction, and itemized deductions of $13,000. Many test takers rush to use the itemized deductions without checking if the standard deduction would be more beneficial. For 2023, the standard deduction for single filers is $13,850, making it the better choice in this scenario. A critical mistake students make is confusing the timing of deductions. Remember that charitable contributions are itemized deductions, while self-employed retirement plan contributions are deductions for AGI. This distinction can significantly impact the final taxable income calculation. The exam also loves to test phase-outs and limitations. Many deductions and credits phase out as income increases. Don't forget that medical expenses must exceed 75% of AGI to be deductible as an itemized deduction. State and local tax deductions are limited to $10,000. To solidify this knowledge, practice calculating taxable income with various scenarios. Focus on identifying which items belong in each category of the formula. Always ask yourself, is this an exclusion or a deduction? Is this deduction for AGI or an itemized deduction? Does this taxpayer benefit more from itemizing? Remember, the basic tax formula isn't just about memorization. It's about understanding how each component affects the final taxable income and ultimately the tax planning strategies you'll recommend to clients. Master this formula, and you'll have a strong foundation for many other tax-related topics on the CFP exam.